2nd of May, it's a Thursday. Dollar index, right. It's been difficult. The dollar sank a lot further than I expected it would this week, as well you know. So, on the daily chart, we've actually, you can't see it because it's on this dotted line, but we spiked down to the 38.2% level, Fibonacci level. We went all the way down to 97.15, so just 3 pips above that level. And then, of course, reversed and rocketed on the FOMC meeting minutes, whatever it was that caused the move. Just looking at the weekly chart, you can see it bounced just above this trend line, which goes back to same time last year. So clearly we remain in a bull trend, and actually, as you can see probably more clearly on this chart than the daily chart, we've bounced well above these little peaks here, 97.40, 97.50. What's this little peak here? 97.53. Okay, so the fact that we bounced up above those looks quite positive for the dollar. We are in a bull trend. It did bounce off support, lower support than I expected it to bounce off, but nevertheless we bounced. Right, now we need to get back up through 97.77, and well, the trend line's at 97.80 probably, is it? 97.78, there you go. And the fib at 97.87, which you've got on the weekly chart, 97.87, which I think we can do. I think, you know, the dollar is clearly in a bull trend and should keep going, but was impossible to hold longs, to be fair. So, you know, really very difficult. Happily, the Aussie dollar shorts worked fine. We didn't get a spike up before the market turned lower. So if you were holding shorts, there was no possibility of you getting stopped out. As I said, I wanted us back below sort of 70-40, 70-30, and we are below there now. So those shorts are working. Now, this one's been easy to trade this week, or been easy to hold a short anyway. From the daily chart, we're in a negative trend. You can see that we're holding a very minor trend line, very steep downward sloping minor trend line. We bounced off it. I don't think that we need to worry about that too much. I think we will continue lower. There's certainly nothing on the daily chart or the weekly chart, I don't think, to suggest that we're going to bounce or turn around and rocket. So I'm happy with the short there. I'm holding shorts myself. Kiwi, we've managed to hold our shorts. That's fine. We didn't get above 66.85. We topped at 66.78 yesterday. So holding shorts in this pair over the FOMC worked fine. You can see the trend line doing its job perfectly there the day before on the 30th, and then bang, the actually rather nicely here we go. The 23.6% fib and the shorter term 38.2% fib, both working perfectly as resistance just below the trend line. Down we go. So yeah, again, I think this pair will continue lower. If you're holding shorts in this as well, which I am, then we look good. We should at least test the previous low, and I think we can break below that. I was holding shorts in the euro as well, and this was just horrible. We went up to my selling opportunity at, well, here, 12.40. I think I had 12.35, 12.45, stop at 12.65. So unfortunately, there's a strong chance that you got stopped out with me just before the market collapsed. That's the problem with running positions over, or trades over, things like FOMC and unemployment numbers. You can get stopped out just before the move happens as you expected. So anyway, I lost out on that one, but I'm doing all right in the Aussie dollar and the New Zealand dollar shorts. Hopefully you're doing the same. British pound broke higher on Tuesday. So Wednesday we were looking for further gains, and we got them. I was looking for it to hold above the 500-hour moving average, to use that as a platform for further gains, and we got that. We did reverse from 131.01, but this still looks pretty positive, as you can see. We've got the breakout above the trend line. Hang on, you need to see this. We've got breakout above the declining wedge, above the 500-hour moving average. Just looking at the 4-hour chart, but I don't see anything worth showing on that one. And we're holding above this trend line and fib here at 130.30, 130.20. So to me, this looks okay. We can revisit yesterday's high at 131.00 or 131.06 or whatever it was, 131.01, perhaps before the end of the week. Gold again finding resistance at the necklines of the head and shoulders in the mid 1280 area. So if you have been selling around there, during the week you've done fine, and if you're holding the shorts, it's starting to look good now with a stronger dollar and weaker gold. We dipped to 12.72. So bears rather, if you are holding shorts, you're going to want this market to stabilize below 12.75, 12.77 to keep pressure to the downside. Obviously, if we push back up through 12.88, you need to be out of shorts and looking for a selling opportunity at around 12.94, 12.96. Oil is a bit erratic. The bull trend certainly appears to be over, and I'm definitely focused on this potential head and shoulders reversal pattern, which will be a sell signal on a break below. Well, the neckline is declining, of course, so now we're looking at a neckline at around 61.90, but technically it's working out fine. The 200-hour moving average took out the saw the market top at the 200-hour moving average on Tuesday. Wednesday we've held the 100 and 500-hour moving average in this little trend line here too. So bears certainly seem to be gaining control. I wouldn't be at all surprised to see a test of this trend line at 61.90 before the weekend, even perhaps. Maybe that's a little bit ambitious, but maybe next week, because we're not really moving particularly in either direction. We'll see. Watch that 61.90. If we break above 64 bucks today, we can retest 64.60, 64.70. Above there, we really need to hold 65.30 for this head and shoulders pattern to still be intact. If we get up through there, then there's no reason why we can't retest recent highs. So we'll see where we go before the weekend. E-mini S&P just got interesting. We've been retesting the previous all-time high at 29.44. This week we spiked higher for a potential bull signal. Got up to 29.61. Now, we reversed very, very aggressively last week. Look, we were very overbought. We know we're overbought. We're overbought on the daily chart too, of course. So the spike to a new high, 29.61, the previous high was 29.56. So we beat that by 5 points, but then got absolutely walloped and took out the previous 2 days price action with a plunge to 29.16. In fact, possibly even 3 days of price action. Yes, it was almost 4 days. So we've taken out the 3 days of price action. Big bearish engulfing candle. I'm sure you know what that is. If you don't, Google it. But it's a very negative signal, especially in such overbought conditions. Now, 29.21 or 29.22 is where we're trading, well below the previous peak of 29.44. This is as good a confirmation of a potential double top in place that you are going to get. So if you're looking for a reason to short this, you've definitely got one. And if you're long, you need to get out because there is potential for a big collapse. I'm not saying it's definitely going to happen, but this bearish engulfing candle is significant enough to pay attention to it when it's just happened at the previous all-time high in severely overbought conditions. That's all I can tell you. I wouldn't be at all surprised to see this market head lower. Whether a crash will happen, I don't know, although we do have the ingredients for it. It can't be ruled out. Right, I'm just putting some short-term fibs on here so you've got some trading levels. The first target was be 29.05, 29.04, and then we've got good support down at 28, around 28.70, 28.65. So these would be realistic downside targets if the market does collapse. Take a note of these. Fibonacci's do work quite well, and they're always worth keeping an eye on. You can see the price action lines up fairly well also with previous peaks and troughs. This trough here just above above these fib levels, and when things line up like this with previous price action, it does give me more confidence that the move is over. In other words, that this little bull run from December is over. So yeah, things are lining up quite well. I think it is worth a cheeky short. I mean, you can, if you sell it now, stop above 29.65. It's a pretty low risk because the downside potential is huge. Pretty sure I've read that there are record VIX shorts out there too, which, if there is significant moves to the downside, will create panic as VIX shorts try to cover. Probably won't be enough liquidity for them to buy the shorts back, and they will have to sell futures in order to cover some of their losses. It will get really nasty, really messy very quickly. Again, Dow Jones, a similar situation with a very bearish engulfing candle, taking out the last 3 days price action. Did we take out 4 days? No, not quite. but obviously it is significant. Stochastics are already pointing lower there. You could argue that this is actually, you could argue that this is a diamond top. I've seen people arguing that this is no, maybe not a diamond top. I've seen people arguing this could be a Head and Shoulders. Well, yes, it could be, but the neckline is very steep. Doesn't mean it isn't a neckline, but you're going to have to see a drop of, well, over 5,000 points before we even test the neckline. So there's not really anything that you can do with that as a day trader. The Nasdaq did not make a new high in reverse, so we do not have a bearish engulfing candle here, but we still have a pretty steep move down, and quite significantly we've broken a trend line going all the way back to December, so there's a little sell signal from the Nasdaq in that respect, not quite as significant as I say as the bearish engulfing in the other two markets. Weekly chart isn't really showing me anything. And the DAX isn't showing anything either. Lots of dojis recently, just showing some indecision, but no clear sell signal. Nothing like we see in the US markets. I guess if the US markets do dump, that would also help my long dollar theory, because there'd probably be some sort of flight to quality. Don't know whether gold will push up. Gold didn't react to yesterday's dump in the stock markets. Gold was lower, so maybe that won't happen. Maybe there will not be a pile into gold, certainly not initially.